Hi folks, Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory. We are clearly on location today. We're down at our advisor retreat, our advisor growth retreat, but we thought we would come to you today with a brief market update, kind of let you know what's going on out there. Markets have been volatile of late, and I would say that the headlines have probably been worse than the actual market performance. So it's not been uncommon for the past couple of days to wake up to a headline about, the Dow down 600 or 700 points or this and that. Just to give everybody sort of a relevant sense, the S&P 500 is down about 1% year to date, which is not that bad at all. And it's also a market in which diversified portfolios are actually doing a lot better than concentrated portfolios. So if you think about the Russell 2000, that's up about 1.8% year to date. You think about international markets, so the ACWI ex-US, that's up about 3% year to date. And boring old bonds are up about 0.25%, but if you factor in their dividend yield, that's more like 1%, a little bit north of 1% return year to date. So once again, a nice market to be diversified across a lot of different asset classes as opposed to just domestic large cap. Obviously, all eyes focused on Iran and what's happening in oil markets. You've seen just wild correlation between, as oil prices go up, the stock market goes down. Flip side of that, as oil prices go down, the stock market goes up. That's all due to oil's impact in terms of overall inflation within the United States. We got out a CPI report, basically in line, 0.3% month over month in the core, in line with expectations, still a little hotter than we'd like it to be. But all of that data that's in that CPI report is actually pre the Iran war. And so it doesn't factor in any of the oil price spike that we've seen. And I would just note that that's probably the single biggest impact on the United States of this conflict is rising oil prices, which in turn raises fuel costs, but then also raises the price of everything else that has petrochemicals in it. So there are a whole lot of products. If you look around wherever you're sitting right now, I'd challenge you to find something that doesn't have some form of petrochemical in it. To the extent that oil prices remain elevated for an extended period of time, that will start to flow through, not just in energy price inflation, but also inflation of goods and services, et cetera, which may keep the Fed on the sidelines for a long time. So once again, markets turbulent, but the headlines have been a lot worse than the overall market performance, and all eyes on oil and inflation as we try and sort through the impact that that'll have on the Fed. With that, as always, if you have any questions, please feel free to reach out to myself or to your advisor. I hope you're having a great day and look forward to talking to you again soon.